Welcome to etvFutures.com. Today is Monday, January 28th. I'm Caitlin Sisney with your Commodities Open. Crude in New York fell more than $1 a barrel on speculation that the slowdown of the U.S. economy will spread to other countries, cutting fuel consumption. Crude is trading at $89.22 per barrel on the NYMEX. Natural gas was little changed on an outlook for higher temperatures and lower heating demand for the eastern half of the U.S. Natural gas is trading at 7.929 per million British thermal units. Gold traded within 0.1% of a record on speculation the U.S. Federal Reserve will lower interest rates again to revive economic growth, bolstering the metal's appeal as an alternative investment. Gold is trading at $922 an ounce. Meanwhile, silver is trading at $16.625 an ounce. Today, we're joined by Mike Fitzpatrick from MF Global. He'll give his outlook for the commodities market.
Hey, good morning, Caitlin. Once again, the market is under pressure. It appears now that the divide in the market is between those who think the coming economic contraction, whether you want to call it a recession or not, remains to be seen, will be severe, and those who think that either there is not one or that it will not be too severe, and prices will wax and wane as each one of those ideas gains predominance in the market. So with the market being down, apparently there are people who feel, there's a majority of people who feel that energy demand growth will be considerably affected as we get into 2008. I imagine a lot of those fears will be answered tonight, one way or the other, by the President's State of the Union. Whether he says anything specific or not is really not the point. What is the point is how much confidence he's able to instill in the markets. Apparently, the Federal Reserve's cut last week was more than a little bit due to the problems that a large European bank had faced and the reaction the markets had to them unwinding some positions. Natural gas as well. Once the cold weather had last week has passed, the onerous storage and the large amount of short positions play against one another. As it appears the market might be strengthening because of the reaction to the cold weather last week. Some excess buying came in to cover those shorts that have been established in the market. As the weather passes, now those shorts will be added to and push prices down. However, it looks as though that the market, until be able to find a firm path, will be at this lower level here and consolidate just below the year's highs, which were put up to the end of 2007, and until it becomes very, very clear that either the market is, or the economy as a whole is going to contract, or it will not. We do think, though, that some lower prices are going to be seen in the next couple of months in both the regular energy complex and in natural gas, and as we work towards the spring, prices will begin to rise again. Problems with the macroeconomy seem to be affecting Europe as well. Some large banks there are putting up disappointing profits, and some Eurozone data appears to disappoint as well. So whilst that continues, the market should remain under pressure. Otherwise, we probably will consolidate and go back higher again in the later part of the year.
Thanks, Mike. That's all for your Commodities Open. I'm Caitlin Sisney. Join us later today for the Commodities Recap right here on etvFutures.com.